Welcome to another deep dive where we cut through the noise, examine the raw data, and really try to extract the most important nuggets of knowledge for you, our sharp-minded listeners. Today, our mission is to unpack the latest from Tempus AI Inc., specifically their Q2 2025 earnings and their forward guidance. We're going to dive deep into what these results really tell us about their performance, what's driving that impressive growth, and what their outlook for the rest of 2025 signals for this company. They're right at that intersection of healthcare and artificial intelligence. We'll be looking at how they're leveraging AI to transform precision medicine and what that actually means for their financials, especially now they're a public company.
Indeed, it's a critical moment for a company like Tempus AI. They're operating right at the cutting edge, aren't they? Aiming to fundamentally change precision medicine, particularly in diagnostics, by unifying just vast amounts of multimodal data and applying AI. What's truly fascinating here is their ambition. It seems to go beyond just sequencing and diagnostics into creating this sort of intelligent ecosystem for healthcare. So understanding their financial health now means looking closely at how effectively they're monetizing that unique data asset and scaling their core product lines, especially, like you said, after the recent public offering.
Okay, let's unpack these numbers then. Starting with the headline figures for Q2 2025, Tempus AI reported total revenue soaring to $314.6 million, which is, wow, an impressive 89.6% increase year over year. That top-line growth is certainly eye-catching. But for astute investors, the real question often lies beneath the surface. Beyond that strong revenue figure, what jumps out to you in their Q2 performance summary, maybe regarding profitability or efficiency?
Yeah, that 89.6% revenue acceleration isn't just growth. It really suggests a powerful market pull for their integrated AI genomics approach. It potentially indicates they're capturing market share quite rapidly rather than, just expanding an existing pie. But you're right, the improvements in profitability metrics are arguably even more significant for the long term. Their quarterly gross profit hit $195.0 million. That reflects a substantial 158.3% increase compared to Q2 2024. This kind of gross profit growth, actually outpacing revenue growth, implies improving unit economics, which is, well, a very healthy sign.
Improving unit economics, okay.
Yeah, and more importantly, they continued to significantly narrow their adjusted EBITDA loss. Now, for those less familiar, adjusted EBITDA is a key non-GAAP metric. It helps us understand a company's operational profitability by stripping out things like depreciation, amortization, other non-cash items, and sometimes one-time charges. It gives us a clearer picture of their core business performance before things like interest or taxes. Tempus reported an adjusted EBITDA loss of only $5.6 million in Q2 2025.
Only $5.6 million.
Right. That's a substantial 82.1% improvement compared to the $31.2 million loss they had in Q2 2024. While it's still a loss, shrinking it by over 80% is a powerful signal. It tells us that their significant investments in, data acquisition and AI infrastructure are starting to hit an inflection point. Their cost structure seems to be becoming more efficient, bringing them much closer to sustainable operational profitability. This is where investors really start to shift focus from just top-line growth to the efficiency of that growth.
So it sounds like they're not just growing, but growing smarter. Is that a fair assessment given the EBITDA improvement?
I think that's a very fair assessment.
Okay, but let's dig into those revenue drivers specifically. It's one thing to see the top line number, but understanding what's actually fueling it gives us a much clearer picture of their underlying business health. Where are we seeing the strongest growth segments and what's driving that?
Right, when we break down those revenue figures, their genomics segment really stands out. Genomics revenue increased a phenomenal 115.3% year over year to $241.8 million. Now, within that, we see two key drivers. First, oncology testing, which falls under their Tempus Genomics brand. That contributed $133.2 million, up 32.9% year over year. This was driven by approximately 26% volume growth, indicating strong adoption among oncologists and patients for their comprehensive genomic profiling.
Okay, solid growth there.
Then you have hereditary testing, which comes through Ambry Genetics. That was their acquisition from late 2023. Ambry added $97.3 million, which is up 33.6% year over year on a pro forma basis, with approximately 32% volume growth. And pro forma here just means looking at it as if Ambry had been part of Tempus for both periods, so we can compare apples to apples after the acquisition. For these hereditary tests, the average reimbursement per test was around $760 in Q2 2025. So this volume acceleration across both oncology and hereditary testing truly highlights robust market adoption and, I'd say, the successful integration and scaling of the Ambry acquisition.
That 115% growth in genomics is massive, like you said, but it feels like a lot of the underlying volume growth, especially on oncology, is closer to 30%, maybe 33% for Ambry. Is that huge difference purely the Ambry acquisition coming online for the year-over-year compare? Or is there something else at play here, maybe around pricing or mix, that's driving such a high top-line number for the whole segment?
That's a sharp observation and a great question. Yes, you've hit it. The Ambry acquisition is a significant contributor to the segment's overall much higher growth rate. That 115% growth for the entire genomics segment primarily reflects the incremental revenue from Ambry Genetics that wasn't present in Q2 2024 for Tempus AI as a standalone entity. However, even within the organic oncology testing, that 26% volume growth is robust. It suggests increasing adoption of their comprehensive genomic profiling and the value they offer clinicians.
Right.
And the hereditary testing, powered by Ambry, also shows impressive organic volume growth at 32%. That indicates strong demand for those services too. So it's really a combination. The strategic leverage of the Ambry acquisition significantly boosting the top-line figure, alongside healthy organic growth in their established product lines.
Got it. And what about their data and services segment? This seems like a core part of their AI strategy, maybe the long-term vision of Tempus AI. How did that segment perform?
Yeah, this segment is absolutely crucial because it directly leverages the massive amount of proprietary data Tempus has collected. Data and services revenue totaled $72.8 million, delivering 35.7% growth compared to the prior year. Now, this growth was notably led by their insights business, which is essentially data licensing. That part of the business grew 40.7% year over year. If we connect this to the bigger picture, this segment is, well, fundamental to their long-term value proposition. They've amassed over 350 petabytes of rich multimodal healthcare data.
350 petabytes.
Yeah, from over 4,500 institutions. And multimodal here means combining different types of information like genomic sequences, clinical notes, imaging, lab results into one comprehensive view. Think of it as painting a complete, incredibly detailed picture of a patient's health journey, which is, invaluable for AI model development and research. This includes data from more than 40 million total patient records and approximately 4 million samples sequenced.
Wow.
And their data and services business also demonstrated robust future growth potential. This is based on committed total remaining contract value, or TCV. That was over $940 million as of year-end 2024. Think of TCV as a future revenue pipeline. It's the total value of signed contracts that hasn't been recognized as revenue yet. It gives us a forward-looking view of their data licensing business's health. Furthermore, they reported a strong net revenue retention, NRR, of approximately 140% from data licensing customers in the same period.
140% NR. That means existing customers are spending significantly more over time.
Exactly. They're not only sticking around, but also increasing their spending with Tempus year over year. That's a powerful indicator of customer satisfaction and the perceived value of their data.
That's certainly a lot of strategic activity, especially on the data and services front. From an investor perspective, which of these operational highlights or strategic moves in Q2 2025 do you see as having the most immediate financial impact? And which are maybe more long-term bets that we should be watching?
Okay, well, several key operational highlights really underscore their strategic direction and future potential. The most impactful in the near term is likely the strengthening of their financial flexibility. They completed an upsized offering of $750 million in 0.75% convertible senior notes just after the quarter ended. These are essentially low-interest loans that can be converted into equity under certain conditions. This move replaces higher-cost debt and added approximately $370 million to their balance sheet, significantly improving their cash position. They ended the quarter with $293.0 million in cash and marketable securities, an improvement of roughly $70 million over the previous quarter. This kind of capital raise, especially after their IPO, signals market confidence and gives them a longer runway for their ambitious growth plans. It's a pragmatic financial move that, de-risk their operations somewhat.
Yeah, makes sense.
On the more strategic long-term side, their multi-year strategic collaborations with AstraZeneca and Pathos AI are incredibly significant. They announced they're building what they describe as the largest multimodal foundation model in oncology. This collaboration includes $200 million in data licensing and model development fees to Tempus, with a version 1 release expected in early 2026. Now, this isn't just a big number. It signifies a massive vote of confidence from industry leaders like AstraZeneca in Tempus's data and AI capabilities. Building such a foundational model could potentially set an industry standard for AI in oncology. The question for investors now becomes how that $200 million will flow through their financials over time and what kind of recurring revenue streams or deeper partnerships might emerge from this in the future, beyond just the initial licensing fees.
It sounds like Tempus is really pushing the envelope on product and platform innovation across the board. Can you elaborate on some of those other new product developments? It seems like they're trying to embed their AI capabilities across the entire healthcare workflow.
Absolutely, that's precisely the strategy. They introduced Tempus XMA for treatment and response monitoring that's a liquid biopsy assay. A liquid biopsy, it's a non-invasive way to detect cancer by analyzing DNA fragments shed by tumors into the bloodstream. It offers a real-time, less invasive alternative to traditional tissue biopsies. This is a significant product expansion into a rapidly growing area.
Right, liquid biopsy's huge.
Exactly. They also expanded their exclusive collaboration with Personalis to include colorectal cancer as a fourth indication for MRD, minimal residual disease commercial partnership.
Yeah.
MRD testing aims to detect tiny amounts of cancer remaining after treatment, which is crucial for preventing recurrence. And beyond diagnostics, they're also enhancing physician workflows. They extended their Tempus NextD AI-driven care gap algorithms into breast cancer, adding to what they already do for lung cancer. These algorithms help identify missed testing opportunities or treatment gaps. Furthermore, they integrated Tempus One, their generative AI clinical assistant, into leading electronic health record systems. Imagine a doctor asking an AI, what are the latest treatment options for this patient's specific genomic profile? Tempus One aims to provide that instantly, making precision medicine more accessible right at the point of care.
Like an AI co-pilot for doctors?
Sort of, yeah. And they also received FDA 510K clearance for a second ECG algorithm, low EF, which detects low ejection fraction, an indicator of heart failure. All these developments contribute to their vision of integrating AI throughout their products to create new diagnostic possibilities and truly enhance physician decision-making.
So what does this all mean for the rest of the year? Tempus AI has provided updated guidance for 2025, and this is where we get a glimpse into their confidence moving forward. What should we be looking for in that guidance?
Their updated guidance, it paints a very clear picture of accelerating confidence, I'd say. Tempus AI is increasing its full-year 2025 revenue guidance to approximately $1.26 billion. That represents approximately 82% annual growth. It's important to note this includes roughly 11 months of Ambry revenue, so it builds on the acquisition impact we discussed. But the truly crucial piece of guidance from an operational efficiency standpoint is their projection for positive Adjusted EBITDA. They are now guiding for approximately $5 million for the full year 2025.
Positive 5 million.
Positive $5 million, yes, which would be an approximate $110 million improvement over 2024. This signals that they expect to achieve operational profitability on an adjusted basis, a significant milestone for a high-growth AI and healthcare company like this. They also anticipate recognizing approximately $330 million, or about 26% of their annual revenue guidance in the third quarter, giving us a specific target for the immediate next period.
Achieving positive Adjusted EBITDA is a major inflection point, as you mentioned. Are there any specific financial considerations for investors looking at this guidance beyond the headline revenue and profitability numbers? What are the sort of nuances we should be aware of?
Yes, definitely. The guidance includes several forward-looking financial impacts that investors should factor into their models. They project total stock compensation and related employer payroll taxes of approximately $150 million for the full year 2025. About 25% of that is expected to hit in the third quarter. Stock compensation, of course, can significantly impact GAAP net income, so it's a number to watch, even though it's typically excluded from Adjusted EBITDA. There's also an anticipated amortization of intangibles of approximately $20 million per quarter due to the Ambry Genetics acquisition. Amortization is a non-cash expense that reduces reported earnings, a common consequence of large acquisitions. Furthermore, they anticipate interest expense of approximately $15 million per quarter for the remaining debt facilities and those new convertible notes. And finally, there's a one-time debt extinguishment loss of $18.5 million expected in the third quarter.
Okay, what's that from?
That usually happens when a company repays old debt early using new financing, like they did with the convertible notes. Accounting rules require recognizing any difference between the book value of the old debt and the repayment amount as a loss. It's important to remember, as their own disclaimers state, that these are all approximate values. The unique nature of their business, operating in this complex intersection of healthcare, diagnostics, and AI, means complete accuracy is difficult to predict. But these are all critical details for modeling their future financial performance and really understanding the pathway towards GAAP profitability.
So you've heard it directly from the sources. Tempus AI is showing accelerating growth, significant improvements in adjusted profitability that signal, potentially, a major inflection point, and strategic moves that deeply leverage their vast data assets and AI capabilities. They are clearly positioning themselves as a leader in precision medicine, not just through diagnostics, but by building this entire ecosystem, with a strong outlook now for hitting positive adjusted EBITDA this year.
Yeah, the blend of impressive volume growth in their core genomics business and the continued expansion and monetization of their data and AI platform, it paints a picture of a company building on its foundational strengths, while at the same time navigating these complex financial transitions, moving from maybe a high-growth startup mindset to a more operationally mature public entity.
This all leads to, I think, a provocative thought for you to consider as you process this deep dive. Given Tempus AI's substantial multi-year investment in building what they describe as the world's largest multimodal healthcare data set and developing these sophisticated AI models, how quickly will the tangible returns on this scale of data and AI investment truly translate into sustained GAAP profitability? I mean, going beyond adjusted EBITDA, and what are the key non-GAAP metrics, maybe beyond adjusted EBITDA, that investors should really be watching in the coming quarters to fully understand the long-term economic leverage of their unique data advantage? Something to think about. That's it for this deep dive.